All right, welcome back. You're watching Markets at Noon on ET now. Well, Mphasis is the company. In focus, the company delivered its quarterly results. Let's bring on board Mr. Nitin Rakesh, the CEO, to talk about the numbers. It's been a good set, strong Q4. Thank you so much for joining us, Nitin. To start with, congratulations on a good quarter. So the growth has been 2% sequentially in CC terms, but you have closed landmark deals of $250 million, highest ever TCV with direct business. So what led to that?
I think the growth was fairly broad-based across all of our direct units. We've seen good growth from top 5 clients, some top 10 clients, top 20 clients. We saw some great growth from, our clients in Europe. Deal win momentum has been strong over the last 3 or 4 quarters. So a lot of the conversion that we've seen, from TCV to revenue is obviously showing up in the numbers. We also talked about how we've created, some very strong momentum in our BCM segment. I think it grew at 23% YOY, industry-leading growth. We also have over 50% growth in our high-tech unit, which is a unit that we spun off a couple of years ago. So very pleased with that kind of performance. And of course, I think overall broad-based growth, broad-based performance across units, across geographies, and across verticals.
All right. Nitin, let's also talk about the fact that all players expect strong double-digit growth, strong deal pipeline. So what can we expect in terms of Mphasis, in terms of a growth outlook for FY21 and the deal pipeline?
I think, that's a great question on the deal pipeline. We've had record conversions with 1.11 billion of deals converted, net new TCV converted in the last 4 quarters. In addition to that, we also announced a new deal of 250 million that was announced for Q1. Of course, we are still in the middle of Q1, but given that we were announcing earnings. And I think despite that healthy conversion of almost 1.4 billion over the last 4.5 quarters, we are still sitting on a pretty, healthy deal pipeline, almost at record levels. And the reason that, we are able to confidently, see good, healthy deal flow, obviously, is given the differentiation that we built with our tribes and squad model. So given the deal, great deal momentum, given the fact that we are still sitting on a healthy pipeline, and we've added 1,300 billable headcount in the last quarter alone, gives us a fairly strong, entry run rate into FY22. We guided for the direct business to actually have market-leading growth. We had a market-leading growth of 17.2% in direct last year. We believe we can actually continue to maintain a market-leading growth, in the direct business, which is 86% of our revenue. And yes, we also expect that at an overall company level, also we'll continue to be, well ahead of, our peer group growth.
So the attrition level for the industry has been rising, and some cost savings earlier are likely to wane in. What is your outlook on the margins given the current situation?
I think we've given a slightly wide band of margins given just the current uncertain environment with, with some disruptions. The band is 15.5 to 17% EBIT. We do expect to tighten the band as we go forward. I think at this point in time, given just the revenue acceleration, we see very, very good operating leverage in the business. And I think that's borne out by the fact that even over the last 3 years, our growth in operating profit is running ahead of our growth in revenue. Our growth in EPS is running ahead of our growth in operating profit, and our growth in free cash flow is running ahead of our growth in EPS as well. So I think it's a very strong operating leverage that we've built into the business. Also, given the fact that the direct business continues to grow very, very, very well, we do get some better margin profile with that business. So I think overall, the margins do have, while the band is 15.5 to 17%. I think that we've guided for a slight upward bias in the guidance of the margin over the medium term.
So Blackstone recently committed about $2.8 billion to acquire controlling stake in the company. Update us on the further open offer. When can we expect the transaction to go through?
So I think we announced this about 3 weeks ago that we're going to have a promoter change, given that Blackstone decided to reinvest and recommit to Mphasis majority ownership from 2 new funds, and we also got additional co-investors in GIC, ADIA, and University of California regions. So I think that the regulatory approval process is on. We believe it will probably take between 2 and 3 months at the least. So we expect that deal to close at some point in Q2 FY22. And depending on the approval from all regulatory authorities, we'll probably get to SEBI, for the open offer process at some point in Q2 is my sense right now. So I think from that perspective, that's the cycle that we're following. And meanwhile, obviously we'll continue to run the business and make sure that our focus on growth doesn't go away.
All right. I know this may be a bit early, but is there a case for perhaps Blackstone to further hike stake in Mphasis?
Yeah, I think we have to still wait and see the subscription in the open offer, because obviously when we reclassify new promoters, they'll also have to follow the 75% promoter shareholder limit. Depending on how much of the open offer uptake happens, we'll get a better sense of where the new funds end up in terms of ownership. So it'll probably be between 56.4 that currently Blackstone ownership today and 75 that is the upper limit. But I think beyond 75, I don't, at this point in time, there are no plans or no discussions to go beyond 75.
Well, Nitin, we leave it at that. Thank you so much for joining us today on ET Now to talk about your performance, and we wish you all the very best. But with that, we're out of time as well, so we're going to wrap it up. Stay tuned.